recording. Perfect. Welcome to another breakdown of this week. We just moved into our new place, so this is going to be the first video that we're going to do. Last week was a pretty good week. It was, I think I did around 79,900 minus commission, 78,577. But the trades taken in that week, there were basically two types of trades. There was a trend trading where price, let's say, is pushing down. We wait for a resistance to form, and then price continues down to retest the bottom. Or the second one was where I traded counter trend, where let's say price is pushing down and it creates resistance. Instead of respecting that resistance, it breaks resistance to continue pushing up. So that's another way to do a counter trend trade. So I'm going to go over all the trades that took last week. There was one loss I took. That was basically my own mistake. So I'm going to go over that as well. So let's start this little video. Okay, so last week I took 7 trades last week. First, we're going to start off with the first trade. This was around pre-New York. This was a buy on pound yen. I remember this exactly because I managed my trades at that point. So this was on the 22nd May, right over here. Okay, perfect. Let's take a look at this on the 30-minute time frame first. So this is what was happening on 22nd right here. Now let's remove this zone, delete this zone, and let's see here. So first of all, we had a most recent resistance around this area, which is 171,700, right? So we had a resistance at 171,700. Then we had the 30-minute candle that broke and closed above this area. But now when you look to the left-hand side, looking at the left, you see that there was another resistance at this point. Now, you have to take a look at this one thing, right? Whenever you have sort of like a resistance on the left-hand, resistance on the left-hand side, the only way price is going to move through that area is if there's going to be volume in the market. So we want volume to come into price or to come into the market to move price beyond that area, right? So if we take a look at this is where we had resistance, and now we needed volume. So if you look at the time, this is pre-New York time. So you can basically anticipate that there's going to be volume during this time, which will push price to a resistance. Now, a lot of people, they want to wait and stuff like that. That's totally fine. I know guys who took buys around 171,900 as this 30-minute candle broke above the previous candle to take impulse entries, but impulse entries are fine. So what I did was I was like, okay, you know what? I can either wait for an impulse entry for price to break above the high, or I can see if I can get some sort of a confirmation on the 15-minute time frame to see if this actually makes sense. So I moved over to the 15-minute time frame, and this is where things were set in stone, right? The 15-minute candle closed bullish. I took a buy, stops were below the previous 15-minute candle, and next candle closed bullish above this high, and then the next one moved up. I trailed my stop loss, and then I closed everything as we came up to this area. I closed partials as we were coming up to this potential rejection area. Now this area you see to the left hand side, it's not necessary that price will reject that area. Certain times when you see these areas to the left hand side, price may reject that area to retrace a little bit and then continue up. So what I wanted to do is I didn't want to lose some profits, so I closed around 30 lots. I closed 30 lots out of 35, and I let the rest run, which was 5 lots. It ran up till the next resistance, which you can see right over here. As it came here, I closed my entire position. We can take a look at this on the 30-minute time frame. I closed my entire position, and price moved up furthermore and came down, and that was a pretty good idea. So took buys over there, played out really nice. Next, this was a sell on gold. The same day. Okay, so I took the sell based off of the 15-minute. So this is the candle right here. I took the sell based off the 15-minute. Let's take a look at this on the 22nd. So the 15-minute candle closed bearish. So I was like, okay, we closed bearish, and let me take a sell. Stops were somewhere up over here, and anticipate price to continue pushing down. Now, there were some mistakes I made over here, right? The 1 hour candle closed bullish, and the 30-minute candle also closed bullish. So when these strong confirmation time frames, they're closing not in my favor, the sell didn't really make sense. So I had to cut my loss. I still lost about like 10 pips, but it was like a 5 lot, so I was like, okay, you know what? I'm going to use like a lower risk because I already made profits that day. So I'm going to use lower risk to take this trade. Now, here's one rule that I follow all the time. If I take one trade and if I'm profitable in that trade, the next trade is going to be a very low risk, right? I'm not going to risk the whole thing. I'm going to risk very less, and then I'm going to continue on with the second trade. That's what has actually kept me in the game. Now, so those are 2 trades that day. Then I move on to the next day. This was the 23rd. 23rd, the first trade was the sell on gold. Let's take a look at this. This was also a very, very easy sell. This was basically, I took this on a 30-minute time frame. So the idea was that gold was obviously pushing bearish, right? So let's take a look at this. We were basically consolidating. This was around pre-London session. So we got the support, we got resistance, we were in a heavy downtrend. Now, candle breaks below the support around 1960, around 1960, right? We break below the support. And what happens is we make a low around 1954 if you look to the right-hand side there. Make a low. Now, whenever price breaks the low, breaks support, it has to come up, do a retest, or maybe create some sort of a resistance, and then there's a high probability for it to continue the trend. So this was that very trade where prices continued to retest the low and continue to trade with the trend. Let's take a look at this right here. Price came up, 30-minute candle closed with a small body. When the candle closed with a small body, this means that there's volume pushing in that direction, but you need a stronger body to close. So I waited for that. A stronger body closed at this point, and that was my cue to take a sell. I entered a sell, stops were above this area, and then there was volume in the market, so we anticipated volume to continue driving price to retest the low, and that's exactly what happened. Secured profits, made about $11,500, pretty good day, easy day. Next was a buy on pound yen. This was also very simple. Let's take a look at this right here. This was a buy on pound yen. We are looking at the 23rd, right over here. Now, this was a little bit tricky. This was a counter trend trade, and it was tricky because the candle right here, it closed with no wick on the top. So let's draw the zones. So we had a support formed, and we had a resistance formed right here, right? Now, once this bearish candle closed below support, right? This meant we could take a sell, right? This meant we could take a sell, but for price to go down, this candle had to break the low to continue down. It didn't break the low, so there were no sells. Next, what happened was that this candle closed above this area and closed with no wick on the top. So now, whenever you have no wick on the top, that basically means that there's a 50-50 chance that price is going to continue to push up or it's going to continue to push down, right? So there's a 50-50 chance. Now, whenever you have a candle closed with no wick within a range, then you have a 50-50 chance. But when you have a candle closed outside of a range with no wick on the top, that means that there's, now at that point, you got to see that, okay, we're closing above resistance. There's volume at this time. What's the probability that we may continue to push up? And you can say, okay, what Raja said, 50-50 chance. Now, how do you turn that chance into like a 60-40 or a 70-30 chance in your favor? So this is what we did. This was taken live. Waited for price to create a lower wick. 15-minute candle created a lower wick. As the candle broke above the high of the previous candle, took a buy at this point, and price went up, secured profits, and basically called it a day. Got like about 10 pips. You can see right here, 171.730 and 171.850. 10 pips closed. Basically, that was it. Also, in this trade, I managed my risk because I had already taken a 35 lot trade, so I managed my risk, and I made about $835. Now, then I took a third trade in the same day. This was on gold, and this was a very high probability setup. This trade on gold, very, very high probability setup. This was a 35 lot. This was done after NYC Open. Let's take a look at this right here on gold. Very, very high probability setup. I actually was very happy with this trade. This was right over here looking at the 30-minute time frame. Now, at this point, when we were looking at gold during the New York session, gold was just consolidating, right? Pound yen moved up, but gold was consolidating still. And we had talked about, so this is where I took the trade earlier on. So we had to break above the price level of 1964 for price to continue pushing up. Now, what happened over here, right? So we had a downtrend. Price broke above this area, created a high. Same thing that happened right here. Remember, price broke below support, created a low, create resistance, boom, down. This time, price broke above resistance, went up, came down, created support with the 30-minute candle closing bullish. Now, so this was a classic counter trend trade. Price broke resistance, created a new high. We had to wait for a retracement. We retraced, created support with the 30-minute candle closing bullish, boom, that was the entry. Very simple. Took a buy, price below, the previous candle, and, like price went up, secure profit, made an easy $22,120. I mean, it was just that simple. This was on 35 lot. If this was on, a 3 lot, it would have been like 2,200. On a 0.03 lot, would have been $200 something, so was very, very happy with this outcome. Next, we move on to the next day, the 24th. This was a buy on gold. This was also around, I'd say, like, pre-New York session. So around pre-New York Open. This was also very simple. It was basically, before this price was just consolidating. There were no candles closing in that direction. I mean, there was no sort of like, I'd say, like volume at that time either. Where is it? Yeah, right there. I don't want to make this a little bit too jiggity. So we had support, and then, like we had a candle form right there. And then once this candle started to break above the high of the previous candle, took a buy, price went up, put stops at break even. And once we started to retrace in this area, I closed my positions, made easy 16,900, I say easy because you have to wait. You have to wait for price to form in a way that you can recognize. Like a lot of times, guys are going to take trades where, guys are going to take trades where they think candle is closing in their way, but it's not closing in your way unless it actually closes. So you have to wait. Let's take a look at this on the 15-minute time frame here. 24th, and let's take a look at this on the 15-minute time frame. Scroll over. Yeah, so this is what the 15-minute candles looked like right here, right? Garbage look. So we had support, we had resistance. We had to wait for the candle to close above 15. This candle closed above with a big wick, and whenever you have a big wick and a small body, this means rejection. So I had to trust the 30-minute time frame to not deceive us as we broke above the high. Just took a trade. Sometimes guys are going to say, man, I saw this trade happen and I was too scared to take the trade. So whenever you're scared to take a trade, just take the trade with a lower lot size, like a lower risk, because it's not like you're scared. It's like you don't have enough confidence to execute in that trade. That's all what it was. You didn't have enough confidence. Now, on the 25th, I didn't take a trade, was busy. On the 26th, took my last trade. This was a buy on gold. This was also a very easy, simple buy. Let me go over this right here. Well, I'm not going to say it was simple. It was a little bit difficult because we had a bunch of problems. So let's take a look at this together. First of all, let's take a look on the 1 hour time frame. Now, 1 hour was basically creating a support, right? We had a support formed, and we broke above this resistance area, and this was a big rejection. Once this candle formed, we don't know what was happening. So let me go candle by candle right here. Now, first things first, we broke above this resistance, and we have a lot of rejection here to the left hand side. Okay, so now what do we do? Right, this candle closed bullish, but it wasn't a strong bullish candle to take a buy. Waited for the next candle. Next candle just moved up, came right back down. We're like, okay, whatever. Asian session, no volume, whatever. And then you have a volatile candle where it broke the low and formed a strong bullish candle. Now, whenever you have a strong bullish candle, this means, so I tell myself, whenever I see a strong bullish candle and I'm not in that trade, I tell myself, hey, Raja, listen, you've missed the trade, right? Because it's a strong bullish candle, and if you were to be in a trade, that was the trade you should have been in, so I missed the trade. Now what do? I do, okay, what I can do is I can wait for some sort of a retracement, consolidation, and then take a buy to continue driving price up. And this is what happened right here, right? Next candle closed bullish. We're like, oh, okay, we have another bullish candle. I guess I have to wait for price to retrace a little bit. Next candle closed with a small body, and I'm like, okay, we closed with a small body. Now, maybe this means that the volume going up is decreasing, and we may get some sort of a, like a retracement. I'm like, okay, perfect. Let's take a look on the 15-minute, see basically what's going on. So I look at the 15-minute candles at this point. When I look at the 15-minute candles, what I see is that there's a support being formed on the 15-minute, and there's a resistance which is broken on the 15-minute right here. And now you have this candle closed at this point. So you got to take a look at this 30-minute candle right here, right? This 30-minute candle closed with a small body, so we got to break this down into the 15-minute. Looking at it on the 15-minute, we see that this candle is actually breaking and closing above the previous candle with no wick at the bottom. Now, whenever we have a candle with no wick at the bottom, and it's a bullish candle, very important concept, it's a bullish candle with no wick on the bottom, this means that there is very high volume for price to continue moving in that direction, because the reason why it has no wick on the bottom and it closed bullish is because that it didn't even attempt to go down. It didn't even attempt to create a lower wick, and it closed bullish. Right? And that was my cue to take a buy. I took a buy, stops below the previous candle. I think I also made a vlog about it where I took a buy and I closed right here at the top. And look at the precision, man. Like, look, Raja Bank style precision close at 1957. I closed it on my vlog as well because I knew where price was going to read. Anyway, so that was a good $21,480 trade. Total profits were $78,570. Later on, I'm going to do a withdrawal, need some things for the house. But overall, I think it was a great outcome. Every trade was meticulously selected. There was days where gold and pound yen both consolidated. So I waited to see which one is going to break up and which one I can take an entry on. Again, I didn't have any bias based off of the daily, based off the weekly, based off the 4 hour. I just look at the 30-minute, 1 hour, and I see that, okay, where can 30-minute can go up, where can 30-minute can go down. That's all what I look at, and that's where my bias comes from. I hope this was educational for you guys, as it was educational for me, because I like to go over all the trades I take. This time, I've been trying to do more breakdown videos of the trades I took the last week, because I want to provide value and I want to provide a lot of knowledge, so awesome. Have a great rest of the weekend. We're going to see you for now. The live streams are probably going to continue sometime next week, if not next week, the week after that, because we still moved into our new place. Look at this right here. Still got things to unpack, stuff like that. This one room is done. And then, this one room is done. So we're just waiting for other stuff to show up. That's my backyard, by the way, right there. So, yeah. Anyway, take care. And we'll see you next time. Adios.